Okay, good afternoon, everyone. Today is the 27th of March, and it's another webinar. And today's topic is going to be about supply demands and how to trade them, how to draw them, and how to look at them. When are they validated? How should we trade them, and so on. And actually the derivation as well with other price structures that we usually look at, for example, support resistance, maybe some trend lines, I don't know, moving averages and whatnot, right? Basically, you are trying to find out when you're looking at these levels, where should we expect price to react from, or to have some kind of reaction, right? Maybe a level of resistance, we should maybe see price moving to, or have some resistance and move down. Support, maybe it moves down, starting to then to go higher after that. And supply demand a little bit the same. Some people, they like to look at the trend lines. Anytime price can approach trend lines, go higher and starts behaving like this. Some other people use moving averages and use moving averages as also kind of as a zone of support. Some other people may look at other type of indicators, RSIs, Bollinger Bands, and so on and so forth. So basically trying to find out where should you expect some reaction from price. And Finland asked to the webinar mostly regarding supplies and demands. So how to draw them. We're going how usually draw them. I'm going to explain that. Secondly, when should we expect them to be invalidated? And also kind of the relationship with supplies and demands and support and resistance as well. I think it's at least for me, it's essential, because they are coexistent, and it's actually important to see one or the other react from. And also, I just remember another important nuance that we actually talked about, I think it was last Thursday, is when you have a higher time frame demand, and then we may have, for example, the bigger rectangle is maybe on the daily time frame or on the 4-hour time frame, and then we may have smaller zones of resistance within that bigger one, maybe on the daily, and then maybe if you go into 15 minutes or 5 minutes time frame, we may find smaller zones within that level. And how should we interpret that those levels, even the bigger one and then the smaller one. So that's basically what we're going to cover in today's session. I know that the three of you are kind of using supplies and demands within your strategy at this point. So maybe any of you could just share a little bit how you treat them and how you are looking at them at this point. But I continue. Ari, Kyriakos, Finway, anyone?
I don't really mind saying much. So yeah, at the moment I'm sort of looking at supply and demand rather than support and resistance a little bit more, even though I've already sort of said that they're intertwined. And I'm kind of looking at the major time frame and try to establish okay, where are the biggest supply demand levels for say just Bitcoin, and I'll be trying to look to catch swing trades from those. Try to aim for sort of 2, 3, 4 RRR, just so that I'm not trying to place too many trades per week. So, but it would be quite useful at the same time to learn more about the same sort of concepts, so supply and demand, but on the minor time frame, so 15 minutes, 30 minutes. Look how they get drawn and try to understand the sort of multi layered levels that you get from looking at these sorts of things, because I do feel like I can miss out on a few trades by not really looking to literally looking at the smaller time frames, if that makes sense.
Mm-hmm. Yeah. All right. Perfect. Ari, how are you looking at it?
Well, hi. Well, the way I use supply and demand is usually, the way I trade is looking for reversals, and I mainly using supply and demand for, let's look at the chart, more like the high time frame, but the places where it's the best likelihood that price should actually reverse. Basically, I use the supply and demand as a conference to give me more validation I see a specific zone set up which we can expect a reversal or change or a rejection.
Yeah. And after that, you align with the other indicators, right?
Yeah, and it actually works quite well.
Yeah. Yakos, do you also use it?
Oh, yeah, I do. Like to find supply and demands basically at extremes and using the higher time frame analysis and kind of making prediction at which levels the price will reverse, since I'm also using I'm also trading reversals and following price to see whether a certain level of supply or demand is valid or not based on how the price is reacting to it. If it breaks above or below a certain level, then it's not valid, obviously. And if it's respecting a level and showing a confirmation, I will catch trades through this way.
Perfect. All right. There's just a few zones in here. All right. So yeah, something that I know some of you have been starting to use much more in your own approach. It doesn't need to be just included in your own execution. It's mostly even used for your own analysis. And again, where should you be expecting price to have some kind of reaction from? And after that, if you have any other kind of indicators or any other approach towards the execution approach, you can do it, right? You can combine these levels with, for example, RSIs, Bollinger Bands, and whatnot, to execute trades. So we can start with the first one, like how do I usually draw it, or how do I draw supplies and demands? Yeah, I try to make it as simple as possible, which is, for example, just this example in here, maybe on BTC. There you go, right? So, okay, 1 second. Okay, let's do it like this. Okay, you have all this space to work with. All right, so as price is moving kind of to the downside, there's going to be some kind of, there are a few levels in there. There's some kind of points where I will try to see that price is being kind of in a battle. Imagine that price is going down. It finds this high, kind of continues to go down, continues to find that high, and eventually maybe when it breaks finally this level in here, it may create something, and where that's kind of where eventually I'm going to draw my my demand zone. And usually what you want to see is kind of some momentum created after that, where, or it's called kind of imbalance on price. When you see kind of price going to the downside, and all of a sudden there's a big imbalance to the upside, where kind of the buyers are gaining control, comparing with the sellers, and the opposite, right? If price kind of going up a little bit, and then all of a sudden there's a big drop, that's usually a supply level that is called, and it's going to be the sellers kind of winning kind of more territory towards the against the buyers. So a few examples of how can I draw it. If you just start going into the lower time frame, for example, maybe you can navigate towards this one in here, just to see how to draw that supply level, right? So this is kind of all the way through the 1 minute. Maybe, yeah, for now, let's just look into the specifics in here. And usually they can go into two ways, right? The way to draw then or to define a supply is most likely because for that supply to kind of start to be created, most likely we need to break kind of a demand zone. So in this case, the way I'll be looking at it, it will be these two candles in here in particular. So this one and this one, this is kind of one of the last demand zones on this 1 minute time frame. After that, we kind of have price pausing. So there's a little bit of a pause in there. Kind of maybe we have no idea exactly how this dodgy candle was formatted, but you can see there's a little bit of a pause in here, and eventually, finally, price managed to break to the downside within this candle, and then the next candle, and you break through. So I'll be paying attention to either this level, most likely I may cover also the low of this one. So that will be kind of my last month zone before the creation of the high. And then as price is finally breaking below this level, I'll be looking for at least kind of to cover at least the low of this candle. And I may even cover the low of this one in here. So now I'm looking to see when price finally breaks this level. I want to see the break of that level and then kind of create my supply after that. So it's important to see if you have, if you kind of have some lows in here, to see when that level is broken. Actually, there are 2-3 points. I already did one webinar covering this level. Basically, you are trying to find out 3 key zones where usually price reacts from within the highs, right? So let's do the repetition of that webinar. There is this level, which is kind of maybe comparing the zone at lows. Kind of this was the zone in here. Then we do create that high. Then there's going to be kind of the first level somewhere in here. This is the extreme. Then price kind of continues to move down. It's going to fight between these lows in here. It's going to go higher. And then maybe in here, there's going to be the decision to break it. And then there's going to be maybe the retracement in here. So there are 2-3 levels important. The extreme of the extreme, which is this one. There's going to be this level in here, either like that or a little bit more, even in more detail. So this is kind of the supply created that originated, that managed to break out these lows, out this level in here. So that's important because that's kind of where the sellers kind of literally won the last battle to manage to break out these lows in here, all this range. And then another important level is this previous level of demand, somewhere in here, that kind of this level in the future can be also a really good zone to look for. And this can be kind of a level of support that can become resistance. And that's why you're going to see that a lot of these support resistance or supplies and demand zones, they kind of are in alignment quite a lot. It may depend a little bit on the time frames, but they kind of look like the same, or you should be finding them aligned quite a lot. So 3 levels to look for: the extreme of the extreme, the supply that managed to break out these lows, and usually kind of the test of this level. So I have 1, 2, 3 zones to look for. In this case, it will be maybe somewhere in here, it will be maybe somewhere in here, and it will be maybe somewhere in here. That you'll be looking for. Okay, maybe just let me draw this with a different line. So the yellow one, it will be maybe in alignment with these lows. As you can see, it was respected in here. Then we have the next one. Let's just draw with blue. We have the extreme of the extreme in here, which is this one. And then we have the other one, which can be considered this one, right? Supply that managed to break all these lows, which can be this one. Okay, so we have the yellow one, the blue one, and the red one. And basically, I didn't even know about this example, but apparently all of them worked quite nicely on this BTC. On this BTC example, we have straight away, as we break this low, we have price respecting it immediately in here. So that's the first touch. So that's done. Even though price doesn't really manage to continue to move down straight away after that, that's a level that has been respected. And then we have the supply itself, number 2, that price eventually decided to go towards that level. And price did this, right? So we managed now finally to create new lows, but which level was left behind? So we have now all this level of structure and we have this level in here behind, which can be used for the future, right? Then comparing with these 3 levels that you are looking at, we are not in control when price actually goes and reacts from them. We should just expect these 3 levels kind of to be touched. Sometimes, for example, the blue zone is touched straight away. Maybe with this high or this high, it goes straight away in there, and then price continues to move to do the rest. For example, maybe price goes here straight away, and only after that we create this level. So if this level is already touched straight away in this phase, this is considered, or at least I will consider that supply has been taken or is weaker at this point. Let's call it it's weaker at this point, right? And this goes to the question that you asked, Finway, about when should you consider the supplies to be taken, or kind of to not work anymore. As a rule of thumb, if you are new to this, I would say just trade every supply that has been supply or demand that is still fresh. When price touches it, it's going to get weaker in there, right? For example, this one, now it's weaker. So this one was still fresh in this moment. This high never really touched it, but at this point in here, now it was the first time touch. So in the future, when price kind of comes back in here, there's a high probability that maybe price is going to maybe break it or just continue to go higher. There's a small nuance in there that maybe this level can still be respected, and you can discuss it about it in a little bit, which is when we eventually have the Quasimodo pattern, right? It's kind of now this level becomes a new supply. We have actually this left shoulder in there and so on and so forth, and we can talk about it in a bit. So yeah, for example, we need to pay attention. We have these three levels, and as price is evolving and moving to the downside, which of one of these three levels is still fresh, right? So in this case, this one was taken straight away. This one was taken then, and price continued to move down. So this could have been a good sell opportunity. And now in the future, I think we have seen that I think price went all the way back to respect this level into there, I think. There you go. Right, so this is basically where Bitcoin retraced all the way through, and it created kind of a double top. And that's kind of a way to find out if a double top is actually going to work or not. Yeah, something in this. Any questions so far about these three levels?
Not from me, no.
Yeah, again, I didn't even prepare this example, just exactly. I did a similar webinar a few months ago. I think even on the Quasimodo webinar that I did, exactly talking about these three key levels. Now, how I would draw it exactly, precisely how I would draw the supply. Yes, I think I would be considering the base of this low. Let me just zoom in here. So we have the base of this low, and then we have this candle in here. And now most likely I'll be considering the base of this candle as well in here, kind of at least something like this in there. If this high doesn't really touch it, then maybe I'll still consider it in the future for price to go and touch it there, and just to be more conservative, I would at least protect the high as well, right? I wouldn't just place an order in here with a stop loss in here. I would actually try to protect the high, unless this high is already too far away, and maybe that would not create such a good risky reward. But in this case, it's quite small out its own. So I'll definitely consider the high as a place to place my stop loss, and out this range in here. Another example, for example, in here, maybe just out this full candle, out this blue candle that we have in here, considering this low, all the way maybe this level in here. So this will be for sure a way to draw this in the demand zone or the supply zone. Sometimes the walls kind of go in alignment a little bit, sometimes kind of goes down a little bit and covers. It's always safe to protect this one or to include it, because sometimes price just touch this one and it drops. If you just wait always for this level, you may not be part of the trade. Just an example. What else? Any other way to do it? I'll be keep drawing in as we see fit. But yeah, this is a good example. It's actually a perfect example, right? Because usually, again, this is kind of price reacting from the support resistance, and actually I can start talking about that now. The correlation between the supply levels or demand zones and the support and resistance. Yeah, for example, when you do have a strong level of resistance level, eventually when this level is broken, it's actually quite nice to see a good level of demand in alignment with this. So this has actually become a really interesting zone to eventually to look for an opportunity to look for longs. So it's kind of a zone of resistance that when it's broken, it's kind of in alignment with a new level of demand, and this alone becomes a really interesting level to look for that trend continuation setup, kind of that breakout setup. We test this level, and moves to the upside. And the opposite, right? When you have a strong level of support, eventually when price breaks this level, it's actually quite nice to see some level of supply level now in alignment with this previous level of support, because that becomes a really interesting level for price to react to, and then kind of to continue the downside. So this could be one of the trading setups that we could look for in alignment between support and resistance and supplies and demands. Another one is like this. Sometimes that demand zone is not going to be exactly in alignment with the highs, with the resistance level. Sometimes it's going to be quite different. Sometimes it's going to be maybe somewhere in here, and now it's maybe where we have that strong move up from here. Maybe the demand at this point is in here, is not in alignment with the previous level of support resistance in here. Or by any chance, sometimes one of these highs is actually kind of a little bit higher, and you have quite a few previous level of highs in here, and then maybe some highs in here, but we do have this high in here, and this kind of becomes the previous level of resistance that can work as support, and maybe the demand zone now is going to be in alignment with these highs in here. And that's kind of when we start to look at maybe some levels of support resistance kind of close to each other. And that's when maybe we think that we have too many lines on our charts. So yeah, because usually what can happen from, let me just draw the other one. What can happen from this level is that price may retrace. Initially, it's going to retest this previous level of support resistance, but it's going to leave the demand below fresh, right? It's not going to collect the orders from the demand. So the demand at this point is still fresh. And one of the reasons to do that is because now we have space, we have liquidity, because with the creation of this low, many more people are going to be looking to look for the opportunity to kind of create a double bottom in here. And price, what's going to do is the opposite, right? So price is going to, actually, it may still look like it's going to create a double bottom, still in alignment with this previous level of resistance that now becomes support. But then what's going to happen is going to occur that fake out of this low, or even maybe this low, into the demand zone that was left behind. And then price kind of is free to start doing this. Okay, so this is usually something that can occur, and this is where looking at support resistance plus supplies and demands is quite, again, and they work together with each other. If, for example, if this low goes straight away into the demand zone, the move that we could expect afterwards is this, because the demand now has been taken, and maybe now price is free to retest this kind of level of the previous level of support resistance that we have in here, and there's maybe some kind of demand created after this low is created. If price just reacts from the support resistance level and it doesn't go to the demand zone, now the demand zone is left behind, and most likely in the future we're going to have that fake out happening of these lows, and that's going to be the opportunity. Okay, so that's why it's important to be aware of those. You can find an opportunity to look for longs in here at this level. It's completely reasonable to try to find an opportunity to look for this. At the same time, you can maybe still be aware that price may go here straight away. But if price respects this level first, and if we still have this level fresh in the future, then in this case, I'll most likely wait for price to eventually take this low towards here, and now that's when I'm going to try to look for longs in here. Of course, it always depends where this high is reacting from. Any questions about maybe these zigzags, jigger-jogging between supplies and demands and support and resistance?
No, I'm all right. All good.
So can you see the difference, like why it's kind of they work together, support and resistance and supplies and demands?
Yeah, it's making more sense to me now, definitely. I kind of knew they worked together anyway, but I couldn't really see it on the charts. But you've explained it quite well, so yeah.
Yeah. And now what we're going to see is exactly the why also this kind of support resistance and supplies and demands kind of they work also a little bit the same. And that goes with looking at the bigger picture levels. because what it looks like, but I think euro dollar is a good example for that. Where is euro? Right? Because, for example, how this could be considered, let me just get a new chart. Daily, where are we? Hour time frame. Yeah, because all these may be considered kind of a demand zone, right? On the 4-hour time frame. And you can see how many touches we have in here, right? We have quite a few. As a rule of thumb, if I'm about to say that I would like to just trade this demand zone as the first time that it has been touched, so that first time it would be in here. So in theory, I wouldn't be interested in trading neither in here, neither in there anymore, because then maybe I'm expecting maybe these levels to start being weaker, and most likely price eventually is going to break this demand zone that we have in here. However, and this is then where the power of and what I said between looking at the bigger time frame demand zone and then looking into the lower time frame demand zones that are within this level in here. And usually when you actually are looking at the 4-hour time frame demand zone or daily demand zone or supply level, the upper edge of this level, so there are a few levels that you want to look at. Usually the upper level, as I mentioned, this is kind of similar to what I mentioned in the beginning, that we have those 3 levels, the high, this level, right, the extreme, and then something in here that actually creates this level, right? We have these 3 levels, 1, 2, 3, correct? I mentioned just that, right? So it's kind of the same thing that we are looking in here. So what we have most likely some level in here at the bottom. We have most likely something in here at the extreme. This level in here can be look like a previous level of resistance that price created, and then price kind of broke through, can work as a support somewhere in there. And then most likely you have some kind of demand zone in the middle that maybe originated or created that move for price to break out this highs all the way through. And then you can, of course, combine with previous levels left shoulders and kind of that Quasimodo pattern that we're always talking about. So this is where everything goes in place. So because the edge of this, it looks like kind of a demand, it's going to look like a resistance that can work as a support. And then we go inside these levels. So we can actually draw some trend lines in here just to see exactly, and this is an exercise that you guys can do in the future, just to see exactly where price reacted to within those zones on the left side. And it's nice to see, because you want to start studying it, or if you want to improve your level of understanding where price usually reacts from with precision and not just guessing, you want to study exactly where these extremes are touching on the left side. And you're going to start realizing that they usually touch between just 2 or 3 levels. And if it doesn't touch there, most likely there's still a chance that price wants to go there in the future. So yeah, so if you do analyze now this level in here, so let's do that. We're going to start. So we go from the daily, right? Daily time frame, maybe even the daily time frame, maybe the demand is still even considering this zone in here. That actually kind of will align a little bit more to the left side. We may have something in there. Yeah. So that was maybe daily. This is kind of on the hourly time frame. This was with big news. It was during the NFP in January, and we start going down. Right? We start going down, and you start noticing the first zone that price reacted from. It looks like a really nice previous level of resistance, right? We have a little bit of these lines in here. We have this week reacting perfectly in there, right? And we had this one before. I'm not sure if price reacted from here or not. This upper edge in there, you can even check. No, didn't really reacted from anything in there at that moment. But yes, we have this one. Then you have the other 2 lines, and you can see the extreme of the extreme is still this one, right? So we have this demand zone most likely in here, which actually, and it goes, again, what I'm saying, it it's going to keep repeating as you go into war time frame. As you start zooming in, it starts to become the same thing, right? Because now we have maybe this rectangle again in here. Within this high, this is maybe, we are on 30 minutes at this point. Within this high, this may be previous level of resistance that price respected quite nicely. Within this level, there's maybe still even a smaller demand zone in there on the 5 minutes as we continue to move down. There you go. We keep going down. You see a little bit of a zone of previous resistance that maybe it was support even before that. And we continue to go down. There you go. Apparently this demand zone in here was already respected. You can see how many touches we have in here. It becomes kind of that level and so on and so forth. And you go all the way to the 1 minute. And this is kind of the demand zone in there. This was the spike created during the NFP. So kind of this is the demand zone initially. But then the other levels on the left side. So for example, this is the first demand. So we start having, before I start analyzing where price reacts to, this goes in alignment again, what I mentioned before. So we have those 3 levels, right? Price kind of reacts a little bit from here. We have those 3 levels, right? If this level is not touched, most likely it's going to be touched in the future. If this level is touched, most likely now the new zone is going to be here, right? And so on and so forth. And this is where usually you can start analyzing from all the way through the lows, and you can start moving upwards, following the demand zones that are created. On 1 minute, everything that we're having here, this is the war time frame you can go. This was the first demand zone. You can even include this, the bottom of this candle. Or actually, maybe before I even start analyzing, what you guys seeing here? What's the first impression that you guys have from this, from all this? Anyone has any idea? Like what stands out to you?
Well, it's basically no liquidity zone in the beginning. It's fight.
Mm-hmm.
And then we have the final decision.
Where is that final decision?
At the end, in my opinion.
Somewhere in here? Or...
Yeah. Well, a little bit higher.
Somewhere in here?
Yeah, that's the decision. You can see, in my opinion, some indecision, small, like
this one?
A little bit higher. We also have some small wicks.
This one?
Yeah.
Yeah, and you continue to evolve, right?
Well, I'm looking at a little bit completely different in the whole thing. And you use it for different ways. So, but during high impact news, it's a perfect tool.
Mm-hmm. Yeah. So studying exactly how this in here is going to, if you manage to decipher kind of what you're seeing here, it's kind of the goal of this session. Fiona, what can you see in here?
For me, I would have probably said the decision was that a bit sooner. I know that we haven't quite broken that 4-hour supply, but I said that if we came back to where, I don't know if I can annotate, but if we came back to where Ari was talking about a little bit more when we sort of broke those highs here, I would have said that the price was ready to move. There was always going to be a bit of a retracement, but once we broke them again on the right-hand side, then yeah, that was confirmation really. But I would have said that that point there was when the decision had been made.
Second.
But then I would have waited a little bit longer to get in, if that's what you're saying.
Which one? Which one will be the key zone?
So for me, the key zone, yeah, so those are the indecision candles, but the one after that where it breaks through these previous highs, yeah. But these highs on the left hand side, yeah, these ones here, these had broken like the last highs earlier in the day. So I think that by that point, the price was ready to move, and you can tell really. So yeah, obviously when it broke it again, that was confirmation, and the price just went up since then.
Yeah. As you guys are talking, kind of different questions kind of start raising, and this could be an extraordinary exercise, right? Because there are a few things to look at here, right? Could be, how could you actually have traded this one? That could be kind of one question. Kind of, okay, you guys are mentioning after the break of this is kind of already with super extra confirmation. Is there any other even way to look for trades even somewhere in here? And then the remaining question, and that's maybe the question actually that I wanted to ask in the first instance, is where do you guys think that in the future, when price comes back, where there are still orders in here for price to react from, and if there are any zones in here, right? So within this level, where are still the fresh orders? Where are still the fresh demand zones in here that we should expect some for price to eventually retrace and come back to, and then eventually go higher, right? So that's always when you are analyzing this level. Again, as I mentioned when I was making this drawing, we are not really in control of the levels that price goes and reacts from, but we should be aware of always those 2-3 levels that price usually reacts from, because they do react from there. And as you keep studying them, you're going to see that price usually goes and reacts from one of those 3 levels, 3-4 levels. So yeah, if you are aware of that, then it's just a matter of, as price is evolving from here, it's just a matter of analyzing them and see, okay, for example, maybe this level has been touched, maybe this level has been touched, maybe now maybe price is free just to react from this previous level of support, maybe in here. Or if this level is still fresh, maybe I need to be aware that in the future, maybe price actually wants to go there before going down. So there's no point of me looking for a sell in here, wait for price actually to go there before I make that move in there. So within this level, where do you think that are still left orders left behind?
Well, what I usually look for is just a place where the strongest candle of liquidity comes out. That's the only thing I look for.
Which one is in this case?
Well, we have the decision, just an imbalance. But
where?
Then right to that, we have a retest of a zone earlier, and then
this one?
And the next one. That's the retest. I think all of it is taken. The next one.
This one?
Yeah, there's a strong candle there, which I look for that.
Exactly. Okay. Anyone else?
That's my opinion.
I would have probably said similar, around that sort of level, just where that box is drawn, the 2 that you've drawn, where it touches it again. That's where I'd have said that there were orders left behind and it could potentially be filled.
Yeah. Kyriakos, Thiago, do you want to participate on this? Yeah. No. Because again, like, so let's play that game, right? So as price is evolving and we create this low, what do we have after that, right? So we start having, first of all, the break of this size. It was already a really good indication because we managed to break this size. So the retest of this is already into that demand. But what we have, right? We have NFP being created. After that, price basically initially with this, we create kind of the demand zone. And we have this previous level of support resistance, right? It's going to be always around this zone. Let's call it support resistance, or call it then resistance, then becomes support. Let's call it SR, just for the sake of it. And supply demand, let's call it SD, just to make it simple. So we always have kind of this level, and we have the demand zone. So initially price kind of goes, it kind of retests this level, leaves kind of a little bit of the demand still fresh, tries to go up, finally goes down, takes the demand, and goes higher. And after the creation, and again, if you start paying attention, and let's actually just start with that, pay attention to these left shoulders, because in reality, everything that you are looking for is for the Quasimodo pattern being created around every time, everywhere that you can go, right? And the Quasimodo, as you know, is exactly this. It's starting to have left shoulders, some lows in here, but I try to go higher. If I count those lows, we manage to break this structure, and then usually on the retest, we go somewhere in alignment to this level, of those lows, and usually there's kind of some demand zone in here, which is exactly what you want to see. Oh, it's a beautiful level to look for, a line or close to a demand zone to have kind of these levels. And where usually you see these left shoulders sometimes being created on the previous level of support resistance that we have. That's usually where you see it. And then kind of a new demand is being created in there. And it's always to collect that space. You go higher, sometimes price would react from here first, goes higher, goes down, and it goes like that. So usually you see that move being created all along with this, and so on and so forth. That's exactly what kind of move, and that's how they kind of keep creating liquidity and manipulating everyone in between. So we have these left shoulders created in here, and we have the demand, and now we have a new demand created. Right, we have a new demand. We can either catch the top of this candle, and we can draw this. There you go. And you have kind of a few new left shoulders in here, which are these ones in here. It's 3. Right, we have a double top. And if you actually want to see, if you want to give a little bit more strength to the left shoulders, to this low in here, when they kind of make this move higher, it will be good to actually see them breaking some kind of previous high. Let's pretend that price kind of is going down, creates a little bit of a high, goes down, and now when it makes this initial move higher, it kind of breaks some structure. That's actually a good sign. And then we have the fake out, and then price does this. But try to find the break of a high, a little bit similar to this, right? So we have a little bit of a break of a high here, right? Price tries to go higher, but then, all right, so it's giving already some kind of indication it starts to want to go higher, but before that, it actually makes another fake out now into this demand zone, and it starts to move higher, and now we have this one new, right? So new demand created. We have new left shoulders in alignment with this one, and there you go. As price is evolving, so this would be the next level to look for a long. Second. As price is evolving, we have this one, we pause. Price doesn't, this low doesn't really go there, so it's still fresh. So we pause in here. So this is a low to pay attention to in the future, and you start moving higher. Now we have this demand zone. Let's mark it in blue. So this one is still fresh, and now we create a new one in here, right? Because now this is the demand zone that is kind of in alignment with the break of this. It's kind of same level. We have, if we actually change time frames, you see that this is the demand that kind of breaks this one. So again, on my drawing, it's kind of that second level, right? We have the one on top, this one, and we have this one. This one in here is this one. Okay, that price never did this. In this particular case, price did this. I hope I'm not confusing anyone. Price did this at the extreme, which was to respect this level, but then it never retraced to this level. Right. So number one was collected in here, but number two is still fresh. And now number 3 is this level in here, which basically price just reacted from this week, and it went away. Right. This is news event. This was kind of a little bit of fast move that occurred in here, and after that price just spiked. But there is this spike in here that could have been the entry after the break, maybe around the level that Finway mentioned, that it was maybe a good zone to look for the entry. So there you go. 1, 2, 3. This one is left behind. Now within this level, there's maybe still the retest of that zone for the future. We noticed that price eventually reacted from. Price went down a little bit. It paused in there. And if you noticed, this last few weeks before Euro made that war low, I had this rectangle, exactly this demand zone, extended all the way through the future, because that's a level that I was still looking for price to go to, because that previous low, price never really reacted from there. And this is what I mean when now I mentioned that price kind of had already went in 3 touches into that higher time frame demand zone, Just move this one. Hopefully it doesn't. There you go. So we had that big demand zone, right? This big rectangle. We had one touch, then two touches, and you can see precisely where this last touch finally reacted from. And it's with some kind of news, if I'm not mistaken. Don't really remember what happened, CPI or something like that. I don't remember now what happened on the 15th of March. Was it 1 week ago? Was it the NFP? What was it?
Banking crisis?
FOMC, maybe?
Banking. Maybe it was one of the days which Michael was just starting off.
Yeah, most likely. Yeah, it was the day after that big crisis, yeah. But you can see where exactly it reacted from. It's this low. I can actually click this one and you'll see precisely. It's this line. All right. It was left behind. It was exactly that demand. And these are the levels that you want to pay attention to in the future. All right. So you may have got frustrated, and this is going to happen with supply demands and this kind of trading. You are going to be frustrated sometimes because you do pay attention to this level now, for example, as price is evolving to the upside, and now, okay, this is going to be the new level that I want to trade, and you maybe are waiting for price to do this, and price doesn't do this. Price is kind of maybe just pausing here and it continues, and you were waiting for price to retrace to this level, and price never went there in this moment. On the 6th of January, price never gone here, and then all of a sudden it just keeps going higher and higher and higher and higher, and you may get frustrated because you identified a good level, but price never went there. So what you have to do is you just keep it there, set up an alert above it, and you need to wait. You don't know when price is going to go there. It's going to be the day after, it's going to be next week, it's going to be next month, whenever it's going to go there. In this case, it was 6th of January. It went there on the 15th of March, right? It took 2 months and 10 days to retrace all the way to that level until kind of it has all this reaction as well, right? So, and yeah, this is something that you need to be okay with, and not then just kind of chase trades if that's not in our plan in here. Any questions? No questions. For example, if this doesn't happen, okay, if price had just reacted from, it came here and it goes like this, and it leaves this level behind. Okay, yellow. It leaves this zone behind, right? It leaves this demand zone, and price just moves away. There was 99% probability that now in the future, price wouldn't stop in here. Price would actually go here and do this. It would have gone there now. Since this level is already taken, and now this is the new fresh level still within this level, that's where price eventually goes and pauses to in there. So that's why it's important to pay attention to those levels, which ones are still fresh or not fresh. And with this, that's when usually you can start looking for that kind of compression or kind of connecting the demand zones and start to look for example, if this level, if this week also maybe doesn't really taken the orders on the way away, maybe in the future there was a little bit of a retracement from this level, and then price could go away. Something to look for, and something that's also important regarding this topic, when you do have those higher time frame demand zones or supplies, it's actually good if you do see them kind of reacting from here first and kind of even managing to break this high again, whatever high it is this. If you actually see them managing to break this level one more time, it actually gives you a great clue that eventually when price finally goes back in here, now to the lower demand zone, that actually it's going to work quite nicely, and you have a possibility or a high percentage or the odds are more in your favor to then see something like this. Opposite to price just reacting I'm just going to extend this to the left. Reacting just from the base of it, we have that high, right? And price kind of reacting from the base of it, upper base, not managing to break a new high, so kind of stays underneath it. And from here, there's maybe a chance that price will just do this instead. Maybe just retest this previous level, react from the demand, and just continue. So it's actually nice when you see that reaction from this level, that you see a new high being created, comparing with whatever high price is coming from. That can lead you to eventually use all these levels in here as liquidity. Again, all this conversation is just to look for liquidity in the market. That's how everything you're looking for. Fresh levels and liquidity. That's basically everything that you're looking for in here. So yeah, that's also a good clue if you do see that happening in here. Yeah, any questions? Just refresh that.
Not from me. I think I just need to go and do some back testing now.
Yeah, a lot of exercises, right? And then in terms of compression, which we can do the exercise now with this, right? So, which is nice to see. As price is moving to the upside, for example, we start identifying, or the main point that we want to try to find out is exactly the separation between, for example, this level of support resistance, maybe a little bit with this high, maybe. Actually, that's a good difference. So, for example, sometimes you do have like this, right? We have this previous level of resistance in here on the left side, that eventually where price reacts from. And we have straight away another one just underneath it, right? So kind of we have this one in here, which can look like maybe a demand zone as well. But yeah, we have this level, price reacted from it, and then we have this one. And yes, when you do have the separation, as you can see, you have this big bullish candle in here. This is what you want to try to find out as well in terms of zones, because we have now from here, price goes higher, it pauses, it starts a new cycle. You can see that price never managed to break exactly this low, keeps respecting it, and eventually starts moving higher. There's no closing of this gap. We are looking for this gap in here, the gap between this high and basically these lows in here. That zone was never closed. So this is a level to pay attention to as well in the future. So when price eventually breaks this, when price eventually breaks these lows in here, you want to set up an alert and to pay attention how price is going to react from here, because eventually there's a high probability that price is going to have some kind of reaction from that level. And this beginning of this level can work quite nicely as a future target. But now what you can start to find out is, as price is evolving, start doing exactly the same exercise. Check the demand zones, check the new demand zone, and keep looking and keep drawing them and keep seeing price respecting them. And what you have, and you are going to have that along the way, is those fake lows along the way to collect liquidity, go higher. Fake low goes higher, collect liquidity into the demand zone, goes higher. Fake low, again, as you can see, this low, price managed to break a new high, right? Just as I mentioned, when you see those left shoulders, you actually would like to see price breaking some kind of highs before then you have the fake out, right? So it broke highs, faked out, goes higher, it breaks out, goes down, uses left shoulder, align its demand, goes higher. This high, breaks highs, fake out, goes higher. You can keep looking, keep drawing new zones in there. Again, new lows being created, goes higher, goes down, fakes out, goes down, goes, takes it, and so on and so forth. You can see the dance that basically price is doing along the way. And you can keep drawing the extremes, right? You want to always follow the extremes. This is the extreme, this is the extreme, this is the extreme. And what you have in here, so this one kind of, this is the extreme in here, right? So this is kind of the demand zone. what you have in here. And this was a big information that we got on the 31st of January. Is price actually broke this wall by a pip or so just before the FOMC meeting, and this was basically the first proper break of a low of one of the lows of the extreme, because this is kind of the last low that created the new high. Kind of pricing here doesn't really create it, and yeah, in here, but okay, it broke this low and it broke this one. If you are still not 100% sure about this one, if you actually want to see this one, and it broke, and it gives that information. And what it creates, what am I having about this, that you want to see from these lows, price breaking new highs. Now flip it, because now it's not looking for longs, actually looking for sells, and you want to see the left shoulders actually managing to break lows. Now we are going to have the opposite. All right, let me actually just draw a different color. I hope you guys can just let me know if you can see what I'm just explaining right now and what you can expect. What should you expect from here now, guys?
Magical. Well, price fakes out, take all the stop losses, creates liquidity, and just drops hard.
And what it goes with is in alignment with these left shoulders and with the supply. Should I extend the line in here and see what happened last Friday or last week? What happened last week on euro? Can you see that we break this one? We have the fake out. We have another break in here. We have new lows in here. We have a beautiful supply in there. I have this. Right after the FOMC meeting. Can you see how we danced from going longs? Always the same type of approach. We finally break lows. We have previous level of resistance. We have one more touch in here. We have that demand. And what supply is that I just mentioned from based on the exercise or the examples that I mentioned? We have the highs. We have that strong supply level that managed to break these lows. Not exactly like that, sorry. Those are something like this. And we have that big drop. So the SR zone, that kind of maybe was touched a little bit by this one. Actually, maybe zoom in, maybe there's already a touch in there. We have this supply, which is still fresh, which is supply number 2. Let's call it number 2, right? Number 1, number 2, number 3. And which one is still fresh now in the future? Maybe it's this one, right? So there you go. Where did euro react last week with the FOMC? From the fresh zone in there. Because basically the base of this maybe has been touched in there.
It's actually very similar to the tech, NASDAQ, FOMC.
Yep. But in terms of the zones itself, right? Just this as I mentioned. Because this is the new barrier, and this is the new demand zone that went higher. And there you go. And actually, if I zoomed into this level, you can basically see it again, exactly in the bigger scale. Kind of you start zooming in, and that's why price is fractal. You go from one side to the other. Did you guys see what I mean? Like, can you see what happened here? Right? You can see exactly this. It's basically what I just explained. I started with Bitcoin, and you're in here. It's just a time frame that changes. There you go. It's exactly the same story in here. There you go. Yep. And you can even now investigate into the highs. And many drawings. I'll just vote. There you go. Into the highs in here. So what you have? All right. So euro, what we have? zone number 1 touched, right? This is the supply in here. Zone number 2 left behind. Zone number 3 reacted from. So in the future, we will see if price is going to go there. One, two, three, 1, 2, 3. Zone 1 touched, zone 2, price never really got there, zone 3. And then, of course, you can even have even better supply levels. As you can see how beautiful the supply is in here. Right. Taking the piece now. Yeah. Right, because this high never reacted from there. And what we have in here, it's another quasi model. Another left shoulder, the price did this. And you can extend this level in here to the left side. There you go. And this is eventually the pattern. And this actually can lead to one of the last points, which is when you should trade still, or should be looking to trade this supply level. So this is the supply level. When should you be looking to trade it after price already touched it? Is if you have a quasi-model pattern in alignment or within that level. What I want to say is if you have kind of a supply in here, you have, and this is just exactly what I mentioned before in terms of the tip that I gave. Price touches, what did I say before? If price touches the base of it, it breaks whatever high is coming from here, and then it goes into the extreme of it. There's a much higher odd. The odds are much more in your favor for then price kind of work in your as a long in here. Is exactly what happened. We have price touching the base of it. This is the base of the supply. Price breaks the lows where price was coming from, and then price goes deep into it. It goes to the extreme of the supply, and it works perfectly in your favor. And this is when then you have the quasi-model pattern. Quasi-model pattern. And then eventually price can still retrace again, go to that level. And this is where usually I will be still trading the supply level or the demand zone if price goes deep into it. I need this left shoulder. I need this left shoulder in there. Otherwise, if price doesn't create this left shoulder, if price just creates literally a supply, price drops. Let's pretend it is a supply. If price just goes here, touch it. In the future, I'm not going to be I don't really want to trade it from here anymore, expecting to break it. So I need that move to create this for me to trade it. And that's why price still reacted quite nicely from here. And again, this is the base of it first, then eventually maybe in the future is going to go there, and it keeps repeating. It's always the same pattern. It's touching the base of the previous level of support, work as resistance. Eventually, this level of demand can be used. Base of it goes deep into the supply, goes away. What it reacts in here, first, previous level of support, work as resistance, creates a lot of liquidity. It looks like price wants to go down. It doesn't, it breaks through, and it fakes out. At first, it reacts really nicely from this previous level of base of resistance. Again, it breaks some kind of a low in there, it starts breaking structure, it eventually goes deep into it. And it keeps repeating itself. It keeps repeating, it keeps repeating, and it keeps repeating. And of course, having this left shoulder in here, that's quite nice. You shouldn't even expect any kind of deep retracement if by any chance there's not a high to be faked out. If you only have, if price kind of is still just in this bullish momentum, it creates a high, there's a really low probability that price will just completely sell off from here without eventually coming all the way here and to fake out this high to then go down. Unless there's already a new high. Unless there's already some kind of high created in here, that this high is faking out in here. There isn't any highs created in here, just the same way that there was no highs in here on the euro created on the left side. There was just that supply above it. There's a high probability that whatever high is being created in here, there's a high chance that eventually price will go there, fakes out that level, and it goes. Bitcoin has plenty of examples of this, where you have that big spike up, price goes down, it looks like it's about to go down, but nope, it's going to go higher. And then the second move, it's usually a little bit slower. It's not just as a spike. It's actually kind of takes a little bit of time, a little bit of a battle, and then kind of it moves like that. Yep. Yep, because it's going to attract many people to think that this is a double top, but it's not. Questions, guys?
Is the difference when we have a fake out? A lot of times we have like a quick fake out, basically just hits, let's say, a bunch of stop losses and we immediately drop down. And sometimes price can spend there, I don't know, 15 minutes, an hour. Is there a difference in the behavior?
Like how fast the fake out is going to occur.
Yeah, because sometimes it's just
fake.
like it's hit the stop loss and drops down immediately.
Yeah, it depends a little bit on the it depends. Like this one is a higher time frame. I'm looking at this 1 minute, but this is kind of a 1 hour, 4 hour level that you are trading in here, and this is literally kind of a typical behavior of a London Open in here. Everything that's happening in here, especially after those news events that we had that spike during the FOMC. So this is kind of a typical London Open behavior, faking out some structure on the left side. It could be sometimes kind of the Asian highs or Asian lows that price tends to go and fake out. And in this case was just this high from the FOMC. And that actually can be a good example comparing that one with is a pound. Yeah, the pound still faked out as well. I thought is the Aussie. I think it's the Aussie. Yeah, can you see the difference? Can you see that on the Aussie? So this is the spike as well from the FOMC, but in this particular case, there was no need to kind of break new highs because this high, can you see how much liquidity is already collecting? You see how many highs you have in here? The price literally went to just touch that supply level. That was still fresh because none of these highs reacted from there. So in this case, yes, it ended up reacting as a double top. If by any chance this high kind of maybe pauses in here, yes, there is a high chance that eventually you're going to still have that fake out of the level. So comparing this one, for example, with the euro, where you don't have any highs on the left side, yes, you need to create that high and then use that high as liquidity. But kind of that's an example of looking for that. What you are asking is it's maybe depends on the if price is approaching, and you had that, for example, I think Aussie, right? We had Aussie. This is a good example. For example, what you are mentioning, right? And the fake out of all these highs in here, we just fake out these highs in here, right? And it was a quick spike. Where are we? It was just literally here. I can remember this move. Right? We were in a live stream. It was quick. There's a spike up. This is 1, 2, 3 candles on 1 minute, and then price kind of reverses straight away. All right, it's quite fast. Price doesn't really spend too much time in there. It just completely dropped because there was all that liquidity. Price was already creating all these highs in here, and you had that happening. We call this move as well. I think Chris managed to get exactly the sell. I missed the sell. It's kind of as always. But then eventually in the future, yes, it's a little bit different. It takes a little bit more time. It's a little bit more of a bigger term move in that moment. It took longer and longer and longer until finally price still fake out this high, went all the way, took these lows, again, took the lows, and then eventually had that big sell-off, which was also predictable because this is where kind of the supply is. Again, based off that level, this size never reacted from there. So eventually price went there and reacted from there. The future is everything that you are looking for in that regard. It's exactly that. It's finding those places in between that level. Yeah, it been, and something that I've mentioned as well, and actually this euro example. Wait, not this one. The euro is a good example. Oh, this one, I'm using this one. I mentioned that usually in terms of looking for fake out or a breakout, and it goes again in alignment with what I mentioned before, usually you have some kind of demand zone in alignment with this break. So it's just wait to see if this demand zone is respected and price wants to go high, or if by any chance this demand actually is kind of broken, and that's when kind of you have the trigger to look for the confirmation, to look for the sell in here, right? Try to find where is that exactly level of structure to do that. DAX, beautiful example at the highs in here, right? We have all this structure that price broke. This is a higher time frame. We have all this working as structure, maybe all this compressed, maybe all this all the way until this demand zone. Maybe this was the demand. There you go. What a beautiful example in here, right? We can repeat ourselves again. Within this level, we have the extreme of the extreme. It was left behind. We have this level in here, which was respected already. Some kind of, this is the last zone in there that you should be looking for price eventually to go there as a double top. But yes, this level in here, wait for it to be broken. Actually, am I looking at the right thing, to be honest? No, I'm not looking at the right thing, sorry. It's kind of the same thing. Yep, it's this level. We had all this structure in here, right? Broke lows, and we have this level in here of range, which is actually quite similar to the other one. So we have this level of range. You just wait to see if this level is actually going to hold price and price just wants to continue to go higher, or if you do break this level and you kind of open space for price to move down, then it's just kind of retesting that level, and you have an extra confirmation to look for the entry in there. And again, if you kind of investigate exactly everything in here, maybe you can fine tune exactly again the points that we looked for in here. Kind of zone number one could have taken this one, the one that broke kind of these lows, it was already taken as well. So kind of we start looking a little bit further down for the next zone in there, somewhere in here. Yep, something in there. Yeah. Any questions, guys? Any questions? Yusuf, you know that you trade a lot as well. Supplies and demands. You want to add anything into this topic?
Hey,
man. Are you there?
Okay.
Hey. Good. How do you trade it? Go ahead.
Yeah, pretty much similar to what you do. A lot of times I like to see if I'm spending a lot of time on the chart, I like to see it enter the zones that I'm looking at specifically. And then I'm looking for it to come away from the zone and retrace back in to a smaller supply or demand within a smaller time frame, like a confirmation entry. Most of the times I'm looking just for like indecision candles where there's been an impulsive move away from, like it's been like a corrective move, then created an indecision candle and then impulsively moved away from the area. Shows that there's a imbalance within that zone. Gives me a good strong supply demand zone. And yeah, if I'm on the chart a lot, I would like to see it enter the zone and react leave the zone in the opposite direction, come back into a smaller supply and demand on a lower time frame, and take a trade from there once it's shown that it can break the lows or the highs that's previously been set.
Yeah, exactly. And yeah, you don't need to trade them just kind of placing 5 minutes or 7 minutes in there. You can wait for the reaction from it, and then you can try to find confirmation after that. After price finally reacts from the demand that you are looking for, then you can try to fine tune a good timing entry in there. Recommendation, yeah, if you do find one on the higher time frame, for example, this strong supply on the euro, and then yes, then you go and navigate into there 5 minutes, 50 minutes, whatever, and you can try to find opportunity. You already know that this high kind of is reacting from a good level. You kind of like the approach, compression, whatever, and then yeah, after this can be break over trend line. Sometimes it works really nice. For example, looking for that break over trend line as a confirmation to enter. Maybe RSI at this point is overbought. Maybe it's starting to show some divergence comparing with this high. Moving average, wait for the break of the moving average, wait for the break of the low to give you that extra confirmation. Yeah, it depends on everyone's strategy in terms of the execution. But yeah, if you do combine, go ahead.
Just a small thing, as you said, the way I think it's for me the most useful is when you combine it, the high time frame zones with fundamentals, for example, high impact news like FMC, NFP, you usually get a deadly recipe for a good trade.
And there you go. This trade here that you took on the card is a good example. It was a super strong kind of demand zone in here, but you had all these imbalance. You managed to catch a trade from here. And if you actually combine a little bit the rest that you talked about in terms of compressions, in terms of looking at price, basically all these highs that already taken the previous supply, you could have, in theory, expect price, especially after breaking this high, expect price to go all the way through and respect to next supply level, which is another Quasimodo in there. Yeah, so yeah,
Nasdaq was just beautiful the day after the FMC.
Yeah. It's Nasdaq. Yeah. All right, Nasdaq again similar. Beautiful supply in there. Just 1 second. Yeah, supply that we have been looking for a long time, and finally price kind of just spiked into there, and it dropped all the way through, kind of to the next level. And we'll see even today now it reacted again from a good supply level in there with kind of a nice Quasimodo again, right? Fake out into that level, and there you go. It's just beautiful. It's a beautiful move in here. Yep. Yeah, guys, it's again practice, repetition, and you can combine higher time frame levels. If you identify higher time frame level in your own analysis, for example, on a weekly basis, you are trying to identify those key levels that you want to find opportunities. If you see price reacting from a 1 hour zone or 4 hour zone, you may not even need the best entry possible that you can get, and you can still catch a good a winning trade. If you are maybe not trading or waiting for price to get to one of those big higher time frame levels, you can maybe then on the 5 minute time frame, you may have the best entry possible, and you can still maybe lose the trade because maybe price still wants to go into those higher time frame levels. So starting with the analysis, starting with identifying those good levels, it can be one of the first things that you can do to improve your winning percentage of the trades, because you are helping yourself straight away to find good levels that most likely price will have some kind of reaction that you can take advantage of. It doesn't mean that every single level is going to move 200 pips in your favor. Doesn't mean that. Pay attention to where price is always coming from, and so on and so forth, right? Being aware of where the highs and lows are reacting from on the other side, it's important. Yeah. It's, there it is. Any final comments, guys? Gold's a beautiful one as well. What's a beautiful one? And gold. Levels you're looking for in here. And again, there. Taking this level. For example, just a rule of thumb, yes. If you want to even consider trading kind of then a supply level, it would be good to see the low breaking the previous level of demand, or breaking something, like breaking a low, a twist, something like that. Trying to trade a supply level where price kind of goes down, but it respects the demand zone that kind of originated that high. Maybe there's a high probability that eventually you're going to see new highs being created. If price kind of has been trading like this as a bullish momentum, it created kind of this high. It respected. It looks like maybe there's a supply in here, but if price respects this demand zone, I wouldn't really look for a sell in there at this point, because price is in a bullish momentum. It's in a bullish trend. Maybe be aware, maybe there's a higher supply level in there that price wants to go to. And yeah, maybe this is just a little bit of a reaction for price to eventually create a new high, continues this bullish momentum where it is. If by any chance, if this low is broken, then the odds get better in your favor to trade from here. Again, pay attention if there's actually reacting from a good level on the left side, or if there's anything kind of that really stands out to you just above that zone, right? Just similar to the S&P. S&P, no, similar to Nasdaq. There is literally that supply that stands out above all these sides, right? So if you do find something like this, and if you all of a sudden see 5 highs in alignment, there's a high chance that price actually is going to go there before anything else. Yeah. All right, guys. Any final comments?
No, thank you very much, Pedro. That was brilliant.
Thank you very much.
It can be maybe one to review, and you can share even on use the Slack channel, the trading analysis channel, to share kind of zones of this examples that you find. Let's use that channel to do that. Maybe some others can comment on there as well, and I can give you my feedback as well on there. Yeah, can do that. Right. Okay, guys. Yeah, with that being said, thank you for attending. I'll see you tomorrow for the morning call. Thank you.
Thank you.
Thank you very much. Bye.
Cheers. Bye.
Bye.